Okay, welcome back everybody. So this is going to be part two of our insurance discussion. Sorry that we had to break that into two parts, but part one had a lot of information about automobile insurance, and I didn't want to make the video too incredibly long, so I decided to go ahead and break it into two parts. This part of the video is going to be about the other four kinds of insurance. So that would be health insurance, life insurance, disability, and homeowners. So let's talk a little bit about health insurance. All right, so health insurance. This is going to cover a lot of things if you become sick or you're injured in any way. Most health insurance covers the following things that are listed right here. So, like if you have to go visit the doctor, that health insurance would be covered or would cover that. If you have to use an ambulance or hopefully not, but maybe life flight, you would have your health insurance cover that. Any surgeries that you might have to have, prescription drugs, so some medicine you would have to, health insurance would cover. Maybe you have to go to the emergency room, it would cover that. And then this very last one here, I put sometimes because dental and vision insurance are actually considered to be a separate part than health insurance. A lot of people have dental insurance and a lot of people have vision insurance, but they're usually not part of the same policy as your regular health insurance. So whenever you are getting health insurance, if you want dental or vision, you need to make sure those are either included or you need to buy a separate policy for those. Okay. Each policy is different. Not everybody has the same health insurance. Most people get their health insurance from their employer. So depending on where you work, usually they will offer some kind of health insurance. A lot of times the employer will help pay for it, but it won't be 100% free. So you might still have to pay a certain amount each month. Remember, that's called a premium. You might have to pay a premium each month. And then for you guys, one thing that's really important for you is under the law, you can actually stay under your parents' insurance until you are age 19. Unless if you are currently going to college full time. And full time is anything 12 hours or above, but you don't need to know that part. If you are going to college, then the health insurance law actually says that you can stay under your parents' insurance until the age of 26. If you're not going to college and you turn 20, then it's going to be your responsibility to get your own health insurance. So you either have to get that through your employer, or if you are unemployed or your employer doesn't offer it, you're going to have to probably get it through the government. The new health insurance law requires that everybody has it. So that would be something you would need to look into when you turn 20. Okay. The next one, life insurance. So life insurance it's an insurance policy that a lot of people neglect because unfortunately it doesn't affect them personally. And what I mean by that is you don't even use your life insurance until you die. And I know that's not like something a lot of people want to think about, but what happens is when you pass away, if you have a life insurance policy, then the person that you have determined to be the one who receives that money, and they're called the beneficiary, the person that you have determined to be the beneficiary is going to get the money from that life insurance policy. Now, why do people get these if they're not even going to get to see it because it only goes into effect when they die? For a few reasons. One of the most common ones is people get a life insurance policy to help pay for funeral cost. It's actually very expensive to have a funeral. And it doesn't matter if you are buried or cremated, it can cost thousands of dollars. So depending on your family's financial situation, that might be something that would be very difficult for them to afford. So life insurance can help pay for that. Another reason is if you are the person that earns the money in the family, so you're the primary worker and your income pays, for your spouse and maybe your children, then if you pass away, they would be in a really, really bad spot, right? Because the person who was earning the money is now gone. So life insurance is meant to help people that are left behind to continue to pay for their bills until they're able to find another source of income. So, like I said, unfortunately, it's not a very fun one to talk about, but it is a really important one to consider. Life insurance is actually fairly cheap, especially if you are young and considered healthy. So the younger you can get life insurance, the better, because it will be really low priced. Okay, disability insurance. So disability insurance is the one that pays for bills if you have some sort of accident or some sort of illness and you're unable to work. The most popular company that offers disability insurance is Aflac. And you probably have seen the little duck that walks around and quacks and talks about, paying bills and stuff. But basically, Aflac and these other companies offer this insurance so that if you are unable to work for an extended amount of time, then you won't lose out on paying your bills and that kind of stuff, that they will step in and help you out. Most of the time, disability insurance pays for about 60 to 70% of your salary before you were injured. Now, I usually get this question, well, why not 100%? The reason it's not 100% is because then the motivation for you to go back to work would be very low, right? Let's say you get injured and your disability insurance kicks in and they just keep on paying you the same amount of money you were paid whenever you were working. For some people, they would not be very motivated to go back to work because they would be thinking, well, shoot, I'm getting paid the same amount and I'm just sitting here on the couch, right? So usually disability insurance pays about 60 to 70%, and this is just meant to kind of get you by until you're able to work again. This is also a common insurance that's offered by your employer. Okay, and then the very last one here is homeowners insurance, and I also put renters up here. If you've watched the apartment video, you already know a little bit about renters insurance. Homeowners insurance basically does the exact same thing, except for instead of only insuring the stuff that's in your house, it also insures your house as well. So if you buy a house and you are the owner of that house, you need to have homeowners insurance. Because you do not want anything to happen to that house and be totally out. That would be terrible, terrible, terrible situation. Homeowners insurance usually covers the following things. It covers fire, it covers burglary, it covers storms like tornadoes, and it does cover some natural disasters like flooding, things like that. However, there are some that are not covered by a particular homeowner's insurance policy. So like earthquakes and tsunamis and those kinds of natural disasters, a lot of times they would actually need an additional homeowner's insurance policy. Another thing that kind of often gets overlooked with homeowners insurance because people don't really think about needing it is homeowners will actually cover you if somebody gets injured on your property. So imagine this. Let's say that we just had a terrible ice storm and your front steps are all icy and slick. And somebody comes to your house and about halfway up the steps they slip and fall and break their neck. And they have to go to the hospital and they have thousands and thousands of dollars of hospital bills. And they can't afford that, right? So they decide, you know what, I'm going to sue them because it was their responsibility to have those steps clean for me to come to their door. If that happens, your homeowner's insurance policy is going to help protect you. First of all, they're going to help provide you with a lawyer to fight in court if you really were responsible or not. And then let's say you are found guilty and the judge requires you to pay a certain amount of money, the homeowner's insurance is actually going to cover that as well. So it's a really, really important insurance. In fact, it's actually required sometimes. So we talked a little bit in the last video about how liability insurance on your vehicle is required. Homeowners insurance can actually be required by the company that gives you your loan for your house, and that loan is called a mortgage. So let's say you decide you're going to buy a house. Houses cost a lot of money. Most people don't have that much money whenever they buy the house. So they get a loan. It's called a mortgage. And the company that gives them that loan, they are going to require them to have homeowners insurance. Because until that loan is paid off, that bank actually owns the house, right? So they don't want anything to happen to their possession. Therefore, they want it to be insured. Okay, guys, thank you for watching.